Alrighty, YouTube. We're doing a December 2nd trade recap. So we're finally up to date with the recaps. I'm shooting both of these in the same night. Very tired. I've been staring at this freaking screen all freaking night, trying to catch up with content. But anywho, so today, very similar to yesterday, had a bullish bias, was anticipating price to go higher. And that's kind of what my focus was, right? So just like yesterday, we're going to use the same indicator. We have relative equal highs between New York lunch high and the New York PM high. So we have very relative equal highs there. And then we have Asia highs, and we have London, right? So London ends up taking out the low that took out Asia's lows, right? And expanding in the morning. Pre-market, we ended up taking out these highs, and then right before market open, we kind of consolidated around this high, and then market open and we expanded, right? So now again, these two lines here on the higher time frame are three equal highs and two relative equal highs, right? So this is kind of where my draw on liquidity is on the higher time frame. That's basically what I'm focused on and what I want to see, right? So just like yesterday, I'm looking for the continuation, and that's what I'm looking for as my setup. So we have two stacked fair value gaps, just like I mentioned with yesterday's trade. And yesterday's trade, if you watch the video, I lost due to premium and discount, right? When there's stacked fair value gaps like this, you usually want to get the manipulation leg of those fair value gaps. So, right, like the low that expanded through these highs from the low to the high of this, right? Boom. Price starts rebalancing. You usually want to take the fair value gap and discount, but there is a scenario where you don't need to, right? And this is one of those scenarios where you don't need to. NQ is sitting inside this fair value gap while ES is very bearish, right? So at this point in time, this is what your focus should be, right? You don't need this discount fair value gap anymore. You don't need that, right? And you don't even need, for example, this 15-minute was opening up. You don't even need that, because we have all the manipulation down here on the other indice, and we have this SMT between NQ. So once I see that SMT, and then I see us start to get this inversion, I actually don't take the trade because I was camping this 15-minute. I was sitting off and holding on for this 15-minute. And that was kind of my mistake. I kind of should have used this manipulation. But by the time I did change my mind to take a trade, I didn't notice that we had this 1 hour fair value gap, which was one of my biggest mistakes on the day today, even though I didn't break even today. I did not notice this 1 hour fair value gap, which is sitting all the way over here, right? Unmitigated, unfilled, right? And that's currently where price has been bouncing around. So I didn't notice the unmitigated 1 hour fair value gap. And I could have used, and I was so close to taking a long, but I just thought that this inversion was too close to this high. But the whole time I could have used this as my break even point, and then I could have longed back to that unmitigated 1 hour fair value gap. So I could have had a really clean setup here and had a really early day, and first 30 minutes into the market, call it a day. So we don't get that, unfortunately, sadly, and price ends up trading into this 1 hour fair value gap. And I kind of have a theory with fair value gaps, and my theory is this, right? If I'm bullish on the higher time frame, right, and price internally has traded to a higher time frame PDRA, such as a 1 hour fair value gap, 4 hour fair value gap, breaker block, things of that nature, right, I anticipate price to respect it. But what is price trading to next is the question that sits in my head. And I noticed that a lot of the times it's just another PDRA that aligns with your bias, right? So if I'm bullish and we trade into this 1 hour fair value gap, am I going to short? Like, again, you can, right? There's a possible short here. We take out, I'm pretty sure a significant high over here. Let me see what high this was. And no, we don't, there's no significant high, but we end up taking out this high, and then we're inside of this 1 hour. So here is where you can start looking for this kind of inversion type of entry. And it's not great. Today delivered no entry because the highest time frame inversion is this 5 minute, and it basically, your target is the 15-minute fair value gap, which is this orange box, and price basically already traded to that. So today you would have an entry, but you can take a short there. But a better trade that you're most likely going to get is if you anticipate and wait for those longs, then you could take a long back to the upside, and a long after tapping back into this 15-minute fair value gap makes a lot more sense than it does if you're just taking a long trying to go through this 1 hour fair value gap. So this is kind of where I took from my setup, right? So remember, I'm camping this 15-minute fair value gap. So all I'm waiting for is what? Well, I'm waiting for us to do a couple things. All I need is a sweep of liquidity, which we get. I'm going to draw it out here. So we get this nice little liquidity point here, and then we get this inversion, right? We get this inversion. I take my long position on the 5-minute, and I'm targeting my external drawn liquidity, and I'm risking below this fair value gap. So just around a 1.6, and I already drew out the trade, so I don't know why I just did it twice, but we could actually take this off. So risking about like a 1.6, right? I did that pretty neatly. This is my break even point. This is my break even point. And then price, after I go break even, eventually stops me out, right? And then it ends up trading lower, right? So I don't think there's anything necessarily wrong with this trade. There's nothing that I didn't like about this trade. The only thing I would have changed is I possibly maybe would have waited for us to maybe start working above this 1 hour and would have just been hands off and just submitted to the fact that I already missed my trade for the day. We did end up coming down and tapping into this 1 hour, and it's also a breaker block. We have this low, which you probably clean around the 15-minute. Let me see if I could find her. We have this low, high, lower low, higher high, pulls back. This is the breaker. So we have that. Price pulls back to that, and then we end up going higher, right? So I'm not upset with my trade. I don't think it's a bad trade. I think it was kind of justified because we already pulled back to that 1 hour, then back to that 15-minute. Us longing from there makes sense. That just wasn't the time that price wanted to go. And now we're starting to work higher through the day. So I'm not too upset with the trade. I do wish I took that 1 minute inversion earlier. And that was just kind of my mistake, not noticing where price was at all. And I ended up taking a break-even trade. So I'm not too mad. I'm not too mad at my trade. If I can change anything, I just don't know what would make me sit to here. Like, I don't know what would make me sit down here. And price ended up closing inside this 1 hour anyways, which is basically lined up with my 15-minute. So even though price wicked down to this fair value gap, price ended up closing around that 1 hour fair value gap anyway. So I don't really know what would change my mind about this trade, what could make it better. I'm very satisfied with where it was at, and there's no other way to put it. I liked it. So with that being said, that is my trading day. Hope you guys enjoyed, and I'll see you guys in the next one.